welcome back to the show. Well, the theme of the day clearly has been a slowdown in urban consumption, and that's what our next guest has also told us in the break. Talwalkars reported a good set of numbers, but not as good as the past couple of quarters that they've done. So for the first time in 5 years, they've reported a sub 20% revenue growth. Anant Gawande, the CFO and whole-time director of Talwalkars, joins us now to talk about that. Anant, hi, as always, good to have you every quarter. And this quarter, as you were telling us in the break, the demand has not been as good as what it's been in the last many quarters. Do you foresee a further slowdown?
Actually, a report which comes every quarter, which we have come out with yesterday, we have specifically said that we believe that the worst of the demand is over, and if in that people have stood tall, then that is only a reason to cheer up. And it goes on to say that current year, we believe with the increase in the GDP growth rate and hopefully a lot of other small triggers coming in, demand should start moving up. We are gearing ourselves in a direction, but that does not take away from the fact that last year was a super tough year, and people were struggling to get discretionary and non-discretionary both consumption into place.
Okay. Did you have to offer discounts? What makes you say that resistance to new applications was very
Actually,
high?
we did completely the converse of this, Lata. On 1st April, there is literally a sort of a letter which has gone to all our managers, no discount. It has to go directly to the CFO, CEO level. That's first. Two, in last quarter, we did do something which was different, which is if you take a 3-month gym membership, you can reduce or new form membership free for 3 months. That is to propagate our other product. So is that in a way discounting? I don't think so, because we wanted to sort of say that if you take this, you will get something else free. That is helping us or will help us in the current 2 quarters till we reach our August-September scheme. But do I believe that discounting is going to help? No. If person doesn't come to your gym, to your health club, any amount of discounting is not going to make him come in.
Okay.
Okay. Let's talk about some numbers now. In this quarter, in Q4, you had targeted a launch of 20 to 25 new gyms.
That's right.
Did you do that?
No, we didn't.
Okay.
Actually, again, because you may not have time to go through the presentation, what happened is we met on this channel around January for the last quarter. Work had started, MOUs were signed in full swing, particularly for the Delhi region. Two events took place. A significant amount of our gyms, and we have stated this in writing, the rents have been reduced by between 75,000 and 1.25 lakh rupees a month.
Okay.
Okay, this is reality. I had never believed this can happen in India. Okay, these are towns like, okay, just to give example, Kochi and Amritsar, across the board.
Rents fell.
75,000 to 1.25 lakh a month, which is 30 to 45%. Okay, these are real rent falls. When that happened, our team said we would like to renegotiate some or all of the rents we are about to contract in those towns, in the new towns, for the new gyms. We did renegotiate them. So, because of that, the new gym opening slid to the first quarter of current year, maybe in the first 3-4 months of current year. So, we opened much lower than expected.
How many?
But to give enduring benefit to our investor or to ourselves, because if we make a rent fall from 4 lakh to 3.3 lakh, that 12 lakh rupees a year is a benefit for the company forever. Instead, we said if this is going to happen, why don't we consolidate and comprehend what we can do in terms of value addition and offer these kind of schemes. As we understood, we are following back. That was one factor. The second, and as critical, is we started getting a lot of inquiry, genuine ones, from regional gym chains, if we would like to do alliance with them and bring that brand as Talwalkar brand. So these two, so if let's say we did lesser number of gym, but we do acquisitions over the next 6 months.
So that's something that's never happened before?
Never ever. We are till date never acquired a gym.
Okay, now what will that do to your longer term margins? If you are going to open new gyms at much lower rents, as well maybe go the acquisition route, your break even for new gyms should fall significantly.
You could see it doing that. We believe that there is also one danger, Lata. I'm a positive minded guy. I believe that the future is always brighter. But I think that the advertising cost has to move up in consonance with the probable decrease in demand or deceleration in demand. That's point one. Two is when we are acquiring gyms. Okay, we are not going to acquire any gyms which will have a EBITDA potential or are not near a EBITDA of 30%. Three is if rental goes down, we will also be adding things like new form or reduce or other thing, where the staff cost in other ways could go up initially and may pick up in demand a little later. But yes, overall I do agree that it could contribute to the margin.
Okay. So you're saying that you will have to spend on advertising. That will be a
little more.
Okay.
Till now we have always got passive advertisement.
So then just give me an idea of what your margins are likely to be in the current year and next year.
See, we have been creeping away at margins. Our core margin, which is a core gymming margin, has increased from about 28 to about 36-37% over the last 3-4 years. We can only chip away 1 or 2% a year. Okay. Could rentals make a significant difference? Yes, they could. Okay. How much will it make a difference? I think September will give us the first indicator, because we are still renegotiating.
Okay, this point that you made, of advertising costs increasing has been made across the board, whether it's companies like Dabur, Titan, Hero MotoCorp. So it's an industry-wide phenomenon. Just take us through what the top line could be. In FY15, you did 20% growth. In FY16, what would be a realistic growth that you could deliver?
See, so it is always better to say that we will do 20%. Because if you remember last year, through the year I was saying 20. For the year we had done 25.
Yeah.
Okay. For the year we had done 25%. Okay. So I would still maintain that we will do 20%. Anything above that, through acquisitions, through value additions, through new gym opening, all of that, okay, I think is plus. Okay. I think we will get a better idea as usual when the September results come, because our first half is very strong, in particular July, August, September. So if that is strong, then we could guide upward, okay, and hopefully not downward.
And how much have you earmarked for acquisitions in terms of capex, etc.?
The simple answer is we are not going to acquire one gym at a time. Okay, so Churchgate, which is a point of example which I used to tell you people informally, we are now opening a gym in 8 days. We waited, we are opening our own gym. But if we get a chain in Bangalore or a chain in Chennai or in Delhi, more than 3-4 gyms, then I think we should acquire them if their EBITDA and ROC is equal to what we would have done.
Fair point. Actually, Anant, we've got our viewers wanting to ask you questions. We give them that facility. So we have an Ashutosh who has written to us from Chennai. He says he is a long-term investor and wants to know what is the growth rate you are looking at or aiming for in revenues and profits over the next 3 years.
Okay. Hi Ashutosh, very nice of you to ask this question. We always give a indicative guidance of profit and never of sales. I still believe what I have told Sonia, that we would like to continue guiding 20%. Do I think that we will do 20% growth for the next 3 years? I think we can. Okay. This is a market which has been very little exploited, and unlike the other countries where there is more potential in gymming, in India we just realizing it. Add to it weight loss, then you have got a fabulous combination of 2 of the best products you can give in India.
Okay, I just had one more slightly qualitative question. You were telling us that the demand has fallen compared to what we've seen in the last many quarters. What about value-added services? Because when people cut down their expenses, they cut down first on some of these value-added products like the Zumbas, the reduced. They don't really need that. Have you noticed any slippage in demand there? Because that's a high margin.
Free floor exercise, aerobic, Zumba, which are the product range you are discussing, is given now in some of our gyms as a part and parcel of the gym membership. Okay, that's point 1. Point 2, weight loss in India and worldwide is never taken as discretionary spending. It is a must do. You do a path lab report, the doctor says XYZ, and based on that you are definitely told to reduce weight first. Okay, if that happens, the first thing they will say is, forget all other spending of mine, I want to go and decrease my weight. Which is why the focus has been now fitness and weight loss together. Okay. So I think that part will not change. Maybe skin, hair and other things may get a bit affected, but I don't know to what extent. So ultimately people will consume less only if they do not believe there is a need for it. Need is created externally by a doctor or somebody else.
Right. Fair point. We'll leave it at that. Thank you very much for joining us, Anant, and for dropping in our studio. Well, we have to take a break, but 2 big earnings are expected from the Nifty today. Hindustan Unilever